Okay. Welcome everyone to Real Estate with Gwen Price, and we're doing our monthly market update, and I'm with Trina Tallon from Neighbourhood Dominion Lending. I always say I have such a tongue twister for me. How are you?
Dominion Lending Centres every once in a while.
Yeah, that's good. Yeah, and unfortunately, Lana Watier, my broker of record, couldn't be with us, but we're going to get through this and just talk about what's been going on lately in the city of Greater Sudbury.
Fantastic, Gwen.
Yeah. So as everybody knows, we've been in a seller's market for a while now, and it's continuing. And it's I was telling you about the stats. Like right now, our average sale price, but we're only 1 month into it. Really, is about 344,000, and that's for residential. That's not including vacant land. It's just single family houses, which includes, when we lump them, we put that semi-detached homes in there. But so 344 at the end of last year, it was about 333, and the previous year it was about 300. So you can see there's been increases, and sellers are doing well. There's lots of multiple offers going on, and drastic shortage of listings. Like I was telling you, I pulled out yesterday, in the whole of the city of Greater Sudbury, there was 116 listings, and that's from 0 to 4 million, just over 4 million. And of those, 41 were new construction, which they probably aren't even started. So you've got about 75 houses that everybody's going after. And in particular, that price range either side of the average. So you're looking like 250 to 450, say, or 400. There's so many people going after that. In particular, like the 300, 250, 300, because that's first time buyers. And so how have you been seeing for what's been going on with the mortgage world?
It's the amount of pre-approvals is astounding.
Yeah.
And I think that the amount of inventory has a lot to do with that.
Yeah.
And also people wanting to go in with cash offers because there's such a shortage of inventory.
Yeah.
And they want to make sure that their credit's straightened out, that they have everything that they need, and like they get a true pre-approval done. And weekends, my phone rings off the hook from real estate asking if their clients can go in cash.
Oh,
because they're just, some properties, the amount of offers that are going in is just, I don't even know how people choose as a seller which one. But
well, and part of it too, and I posted something there, like a little seller tip, talking about if you have a house to sell and you want to buy another house, you cannot put, years ago, you could put in conditional on the sale of your home, but you can't do that anymore, not in this competitive market. So what I was trying to tell people is you absolutely need to be talking to your realtor and your mortgage specialist to see, can you buy another house if you haven't sold yours already? And not everybody can. And that's the dilemma, why they can't also list. So that, that even compounds the problem with the shortage of listings.
It does. And that's something that when I have that scenario with a client that they have to sell and they're buying something else, I have to make sure that they can afford both somehow, just in case.
Yeah.
There's always the just in case, right?
Yes. Well, you got to go there.
Yeah, there may be that house out there that doesn't have 20 offers on it.
Yeah. I mean, likely, if they list their house, they're probably going to get a sale on their house too. But you're right. You got to think of all the scenarios that could happen. And it's not to say you can't list your house and we can make it listing conditional on you finding suitable accommodation. It just complicates the situation. So that's why if somebody's able to go in without that condition, lots of them are unconditional, no inspection, no nothing, right? And it's pretty tough on the first time buyers. I've had it, I'm working with a couple and they've been beat up by it a few times, right? It's pretty disheartening. They want to buy.
Yes.
I mean, interest rates are so low. What are we kind of hovering around now for rates?
Well, with someone putting 5% down, like a 5-year fixed is around, like, let's say 1.54, 1.59.
Yeah,
And they're going to stay down for a little while. I'm still a bigger fan of the variable rate as
yeah,
opposed to a fixed rate. Again, going back to my stat about, 68% of Canadians break their mortgage within the first 5 years that they have it. So
yeah.
it ends up being about penalty when they do break it, and not about the longevity of their fixed rate.
Well, and I can't tell you the number of times in 33 years that I've heard, oh, thanks for selling me this house. I'm never going to sell again. But there is this whole turnover. People do sell way more often than they ever think for whatever reason. It can be that maybe that first house, they've outgrown those needs, or God forbid, there's somebody passes away, or there's a matrimonial situation, right? So today you may think you're never going to move again, but often you do, and you got to be kind of thinking of that too.
Yes, the matrimonial situation has been a big one in the last months.
I bet, because it's so stressful, and we were kind of touching on that, the mental health issues and the stress that people must be under financially and psychologically, going through COVID is huge. It's a huge factor.
And it's important for people to know who are separating, if there's a chance that there's going to be any kind of a mortgage involved with either party at any time, of course, talk to your lawyer, but before actioning anything like a separation agreement or appraisals or anything like that, they really need to talk to a mortgage specialist about their options.
Yeah.
And I do have lenders that have allowed mortgages to happen without a separation agreement being completed.
Okay.
But those are things that, you need to talk to someone like me and outside of a bank, and to find out what your options are.
Well, and that's why I think that, over the years, I've seen so many changes in the banking system, and it's even that much more important now to be talking to a mortgage specialist, because the ins and outs, and you can help guide somebody, and even I've talked about buyers. Maybe the buyers aren't ready right now, but how do I get from point A to point B? And that's where you need some guidance, not just from a realtor, but from a mortgage specialist. What can you do to improve your credit? Credit is so huge a factor when you're getting a mortgage.
Well, so many people don't realize. So I just had one of my clients that she had a super fantastic, I almost swore Gwen.
That's all right.
Like 3 years ago, she had a super fantastic credit rating, but Equifax and TransUnion have changed the formula for how they determine the final credit score.
Okay.
And if you keep more than 50%, so 50% of your allowable credit limit on credit cards and lines of credit, it significantly decreases your score. So you could pay everything on time, make the minimum payments, but that score is going to drop like crazy. So she wanted to go buy another house, and I had to explain to her that because she carries these balances on her credit cards, that her scores drop below what the mortgage insurers, so CMHC and Sagen and Canada Guarantee, will allow as a minimum credit score. That's how much it affected her credit.
What is that? What is that minimum that they're looking at?
So the banks tend to, your absolute positive minimum is between 600 and 610. Mm-hmm. But there are credit scores within that final credit score that they look at. There's a score that determines what your chances of bankruptcy is in the next 90 days, how you utilize revolving unsecured credit. Yeah. So the mortgage insurers look at all of that. Like in this young lady's particular instance, they had tons of money in the bank, but they didn't pay off their credit card.
Okay. Yeah.
So now the situation is that she needs not a cosigner, but her mother actually has to buy the house.
Wow.
Yes.
Well, and how, I mean, and we talk about COVID money because a lot of people are still um, using that to basically get through these times. And uh, I imagine the banks don't look at that very well.
That is not considered income at all because it's basically EI,
Yeah.
the unemployment income that you get if you don't have your job. And the only time that EI can be used is for seasonal workers who have collected it over the last 2 tax periods.
Oh, that's good to
That
know.
average can be used because they are seasonal.
Yeah.
But in order to get a mortgage, if you're affected by the COVID lockdown with your job right now, a couple of lenders, very few, because no one really knows when this lockdown is going to be over. I've
Yeah.
had a couple that have taken letters of employment that state, this person will be back on this particular date, but then we end up getting extended. So the lenders are not even like going by that anymore. They want,
Yeah.
you have to be back at work. We need a current pay stub. That is all.
Yeah, well, and I'm still not sure when this lockdown's ending. I keep hearing different dates. I keep hearing maybe they might extend it. So we got to work with whatever we have on our right here, right now. And I mean, we were talking too, part of the reason the shortage of listings, I'm sure, is because some people have been terrified anyway through COVID, and they're even more so when we're talking about a lockdown and nobody's supposed to be going anywhere or doing anything. But uh, the reason we're essential is because some people could be out on the street without a house, or so we do have to continue to show. But there's a lot of people very nervous about it, and when you hear about all these what do they call it? Variations or varieties of this thing, and people maybe coming up from down south, and so they're fearful. So that, even again, that's another compounding of the shortage of listings. So we'll see what happens once we get maybe towards the end of February. Is some of that going to be relieved? And um, but I still see a seller's market. It's not going to switch on, drastically and become a balanced market. There's still so much demand. COVID has played such a role in the types of properties people are looking at, and the fact that I think there's that you want to have something tangible. I own this. This is mine, and there's a lot of
Absolutely.
that. Yeah, there's a lot that's been going on in people's minds and thought process, and what do they want out of life, what's important now that wasn't so important last year, before all this started.
Exactly. And like a lot of folks are looking, like you said, for homes instead of renting, because there's also conditions now on whether or not you go to your cottage. I
Yeah.
found out last week something to the effect that you can go for a maximum of 24 hours or you have to stay there for 2 weeks.
Wow.
So now we're getting like, and it's to control what's happening, right?
Yeah. Yeah.
And the only way we're going to get through this and out of this, even, because the rollout of the vaccine, you hear different things all the time, but
Yeah.
who knows when that's going to happen for everybody. So folks are looking for their own nest to go to and to be able to have freedom to work on the yard and do things like that and paint and everything, because there's a lot less that we can do.
Well, and you're with your family all the time, and maybe that little house you had or that apartment you had, you're driving each other crazy, and you need more room, right? You need a yard to escape to. So it definitely has changed people's mindset about a lot of things. And but I mean, Sudbury is doing well,
We're
considering
doing very well.
what's going on in a lot of, like I always keep saying, compared to a lot of parts of Ontario, a lot of parts of Canada, we're doing pretty well. There's people still making good income here, and I'm hoping that somehow they can come with some type of allowing some of these small business people to go back to work, because it's hard to understand some of the reasoning. I want to control, what's going on with this virus, but at the same time, I want some of these small business people to be able to open to some kind of limited capacity would be,
Oh, for sure.
you know.
I agree.
So, well, basically, I mean, like we're only 1 month in rather this year, and we'll see how the trend, because it's very hard to, you know, statistics, you need some kind of more than 1 month really to see what's going to happen, but it looks still favorable for sellers and for buyers. If you can get in, you can get a house, the rates are phenomenal. That's pretty good if you can get around one. If you're under, I mean, like again, I mean, I remember the double digits, right? So this is unbelievable rates. So that's a good time to be buying. And it's just, you got to be dealing with professionals. You need a realtor to be looking for you. You need a mortgage specialist to help guide you through all of this. It's just too much to be doing on your own. So anyway, well, thank you again, Trina. It's always
Thank
great.
you, Gwen.
And, you know, we'll see what happens after the end of February, how things are progressing and what this year's going to look like. But happy Valentine's Day.
Yes, happy Valentine's Day.
It'll be a little different. I guess last year were we in? Yeah, no, yeah. Last year we were okay. We could go out for Valentine's Day supper, but this year, yeah, we'll have to have a romantic dinner at home.
That's right.
Anyway, you take care and thanks
You
so
too,
much.
Gwen. Great chatting. Take care.
Yeah,
Bye now.
bye-bye.